Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance and get to the heart of what these filings truly mean. Today we are diving into a filing that might seem a bit dry at first glance, but trust me, there is an interesting little transaction hidden within that is worth your attention. Let's cut straight to the chase. This report is from Principal Credit Real Estate Income Trust, and it is about them selling shares of their company. Normally, when companies sell shares, they have to go through a whole bunch of paperwork to register it with the government. But sometimes, especially for private companies or specific types of offerings, they can use exemptions to avoid that lengthy process. We are going to look at one of those situations. So Principal Credit Real Estate Income Trust, they are the company we are looking at. They are basically a real estate investment trust focused on credit-related income. Think of them as a company that invests in debt secured by real estate and collects the interest payments. The main event here happened on October 1st, 2025. This is when they made a sale of some of their stock, basically. The filing confirms that October 1st, 2025 is indeed the earliest date of the events we are covering today. This number here is the company's IC or Central Index Key, a unique identifier assigned by the US Securities and Exchange Commission, or SEC, to companies and individuals filing with the SEC. Now, what exactly did they sell? They sold what they call Class F, common shares. These are essentially shares representing ownership in the company, specifically a particular class of common stock. They managed to sell over 94,000 of these shares. That is quite a number of ownership pieces changing hands. And for all those shares, they received about $1.9 million. So they effectively got roughly $20.45 per share, which seems like a reasonable price for a private company's shares. How did they get to sell these shares without the usual registration process? They are using an exemption from registration. This is allowed under what is called Section 4 Little, a Little 2 of the Securities Act of 1933. Basically, it means they are selling these shares directly to investors without a public offering, and they are relying on specific rules under what is called Regulation D. This typically means selling to a limited number of sophisticated investors who can fend for themselves, so they don't need all the protections of a public disclosure. It is a way for companies to raise capital more quickly without the expense and time of a full public registration. This table is the core of the filing. It breaks down the sale of those Class FI common shares. It clearly lists the type of security, the number of shares sold, and the total money received from that sale. Here we see the quantity sold, 94,186 and 46 hundredths of a share. And here we see the total amount of money they brought in, a solid $1,926,000. And finally, the person signing off on this report is Brian Riley, who holds the important title of Chief Financial Officer. This means he is the top financial executive and is responsible for the company's financial reporting. This report was officially submitted on October 3rd, 2025, just a couple of days after the sale they are reporting. Now, let's step back and look at what this all means. Principal Credit Real Estate Income Trust is actively raising capital through private placements. They are selling ownership in the company and bringing in significant funds without going public. This is a common strategy for many private companies, especially those in specialized sectors like real estate credit. The fact that they are selling a specific class of common shares suggests they might have different share structures for different types of investors or different purposes within the company. The key takeaway here is that they are executing their fundraising strategy by selling shares privately. This allows them to get money into the business without the full burden of being a publicly traded company, which involves a lot more regulatory oversight and reporting. For investors who participated, they are getting a stake in the company at a price that seems reasonable based on the information provided, and they likely meet the criteria for sophisticated investors who don't require the full protection and disclosure of a public offering. Are there any risks? Well, anytime a company raises money privately, it is important for investors to do their due diligence. Unlike public companies, private companies often have less transparency. The exemption they used means less public information is available. The success of this strategy hinges on the company's ability to use the raised capital effectively to generate returns that benefit all shareholders. In conclusion, Principal Credit Real Estate Income Trust is actively managing its capital structure by selling private shares. This isn't a major market-shaking event, but it is a clear indicator of their ongoing business operations and their approach to growth. For them, it is a way to fund their real estate credit investments. For us, it is another puzzle piece in understanding how private companies operate and raise money. What is your take on this private placement raise? Do you think this is a smart move for companies who want to avoid the spotlight of the stock market? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching. See you next time.